closer look at the booming $1.7 trillion private credit market. A fight between Barings and a group of senior defectors is a rude awakening for the market that sells itself on trust, discretion and stability. Bloomberg's Paula Seligson co-wrote the story and joins me now. Paula, thanks for joining. So explain to us what happened. The details are a little bit murky about how these 22 left Barings for another shop.
Yeah, so what we did know before our story is that 22 people resigned at the same time on the evening of March 8th. And now we can tell you a bit more about why they left. So what we learned from our reporting is that Paul Waitman offered the defectors equity in his new firm called Corinthia, which of course opens up a path to much more wealth for them and also alignment with the business. But it wasn't just about the money. Tensions have basically been building for a long time at Barings, and they were upset about how management fees and carry, which is basically the share of profit fund managers get to keep, they were a lot lower at Barings than at their rivals. And then in addition, the private credit team felt like they just weren't getting the support for operational matters and recruitment. And they were also just unhappy about some of the revenue sharing agreements going on. Then the other issue they had was that Barings is owned by a U.S. insurance company called Masse Mutual. And basically, they were investing in some outside private credit funds. The lion's share of what they did was through Barings, but that misalignment also frustrated the defectors, which led them to ultimately leave the business and jump ship to Corinthia.
So is this even legal, Paula? You have to wonder how Barings would have responded.
Yeah, so Barings has sued Corinthia and basically claimed that there's been a very grievous misuse of confidential information. Corinthia has since basically filed a motion to dismiss to say that this, is nonsense and there's no evidence for us actually having misused any confidential information. This is going to be a messy court case that is currently working its way through the courts, and it is currently unclear what is legal, and that will be up to a judge to decide.
What about the investors that would have been with Barings with these 22 plus people, and now they're faced with either staying with Barings or moving with the person they had been dealing with? How have they been reacting?
The investors are very mad about the entire situation. And when I say investors, we're talking about the, pension funds, the sovereign wealth funds that gave money to Barings to these individual people to then be put to work through private credit lending. And so these investors are very mad at Barings for letting this happen in the first place. The employment contracts are very relaxed, and obviously, some unhappiness at the firm led so many people to jump ship. But they're also very mad at the people who left Barings because, these are people they had sometimes decades-long relationships with, and they were, in some cases, taking meetings with these investors up until the point that they jumped ship. So it came as a huge shock to the investors, and they're also just unhappy with how public and messy the whole situation has become.
Well, and the suddenness of it all as well. I mean, we don't know what investors knew in advance. If anything, may have been illegal to actually give anybody a heads up on this. But it remains to be seen then how these 22 perform at Corinthia. It could be a big disaster, could it not?
Yeah, so I think the entire private credit industry is closely watching to see what happens. First of all, can they pull it off, right? Like, will they have a successful, set of loans, or they have good returns and make investors happy, whoever those investors end up being? But everyone's also just watching to see what happens, right?